Hey, Larissa's here. First thing, Jesse and more. What's happening? Let's get set up here. I'm just about ready, guys. Just about ready to go. That being said, let's see who's here this morning. Larissa, Jess and more. Captain Cuts, Crisco, W, Welch, 270. Araspa, 26. Parsons, Gavin. Gail, what's happening, Miss Gail? Bill, Crisco, Loss. Jersey's here. What's happening, Jersey? Pressure, what's new? What's cooking? What's going on? Nobody on YouTube. 2 people on YouTube. You guys not going to say hi over there? Come on. Jerome, what's happening? Alrighty. Larissa James, hope you're having a great night. So far, so good. Thank you there, Miss Larissa. Mel, what's happening? Am here. Well, alrighty then. You're here. All right. Let's get started. We're ready to go. Nobody on Facebook yet. Imagine that. Why do I even bother with Facebook? Nobody's ever there. Oh, well, it's what it is. Give them the opportunity. It's there. Okay, Jersey wants to take a look at Macy's this morning. All right, we'll take a look at Macy's first thing this morning. Ooh, and we get to turn the page from last week to this week. What do we have coming up this week? Ooh, look at that list. Holy cow. All right, so Macy's going to be first on the list today. Macy's. There we go. We'll take a gander at it. Why not? CP, morning. CP, where are you calling from? Where are you signing in from, CP? Morning. It's evening here. No tea tonight. I'm going to try water and honey. See how that works. Get the old get the old vocal cords moving. You said good morning. Oh, I did. Sorry. Oh, alrighty then. Good evening, everyone. Now, let's see if we can get started here. It is, get glasses on. It is, good evening, everyone. It is 9:22 p.m., 3/16/25. That's the 16th day of March. Alrighty, 2025. Interesting stuff going on. It is. I'm not quite sure what's going on. J-Dub, what's happening? Maple Kitty, how can I invest ethically and still make money? Okay, Miss Kitty, or Maple Kitty, you're going to need to be a little bit more specific. Tony, what's happening? A little bit more specific. What do you mean by invest ethically? Okay, so Maple Kitty, let me give you a brief rundown on what I do and see if it makes sense. All right, first and foremost, I only invest in dividend stocks that have consistently increased their profits to their shareholders. Now, if you don't know what a profit is in that manner, J-Dubs, all right, there are 2 different kinds of company in the stock market. Now, we checked last week. There was 9,976 different companies I can invest in at any moment in time. So, ethically, how do you decide which is ethical and which is unethical? Well, it's all going to depend on where you grew up, what your beliefs are, and what you think is right and what's wrong for you. Okay? Fix your YouTube, please. What's going on with my YouTube? Hold on. Let's check YouTube. All right, YouTube. Okay. 10-minute trade is popping up. I'm going to check on YouTube for a second. Okay. That one says live and that one says live. What are we missing here? What are we missing? You will not invest in Tesla. That's okay. I don't do Tesla either. Okay. That one seems to be working. Is that one working or is that not working? That one says live and that one says live. What are we missing here? What are we missing? You will not invest in Tesla. That's okay. I don't do Tesla either. Okay. That one seems to be working. Is that one working or is that not working?
That one says live and that one says live. What are we missing here?
Okay. I'm not quite sure what's going on. Stop recording. I don't need that recorded.
That's okay. I don't detect the either.
All right. I don't need that open anymore.
Okay.
Seems to be working. I don't know. There we go. Now, if I go back to YouTube now, hypothetically, that should be showing, right? Okay, just give me a second, get this all set up. Tesla, yeah, there it is right there. Okay, this one, what's going on here?
Yeah, there it is.
Yeah,
right there.
see, that one's working.
This one, what's going on here? Yeah, there it is.
Yeah,
right there.
see, that one's working. And this one, yeah, that one's working too.
Okay, just give me a second, get this all set up.
Okay, so YouTube seems to be working. Let's get out of there. Let's go back to here, and let's go back to there. All right, so. La 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 la. Diddy, what's happening? Mud Island Production. What's a good call strategy? Okay, hold on a second. Virginia, thank you. Papa Joe, I will not invest in Tesla. Okay, no problem. Papa Joe, I sold all my Tesla. Alrighty, that's fine. Your setup screen is showing. Fix that one. Tesla, got it. Miss Kitty, so the S&Ps are tanking. Not a good time for those, right? Now, I don't do the S&Ps. Okay, terribly sorry. I looked at the numbers a long time ago, and the S&P just doesn't work for me. Okay, it's not consistent. I like consistency, and I like profitability. All right. Scott, thank you. It's fixed. All righty. Simone, how are you doing there, Miss Simone? Tatted up, Ginger. Hey, what's happening? Tried giving you a buzz, dude, and it just didn't seem to work. See, my phone is a Metro PCS, and it just didn't want to work with yours. Maple Key, I just use Cash App for beginner stocks. What should I move them to and how? Melodic Angie, good evening and pleasure for you to be here, Melodic Angie. Okay, so Maple Kitty, what I invested specifically. Now, we looked at this last week. There's 9,976 different companies you can invest in. All right, fine. So I'm looking for companies that are consistently profitable. Now, the way I consider consistency of profitability is you have two you did. You texted the phone, and I did take a look at it. I'll text you back tonight and see if we can go from there. I'll figure it out. We'll get it figured out. Don't worry. It went through on that number. Yeah, I know, because that one's not on Metro PCS. Anyway, as I was saying, sounds good. Okay. So 9,976 different companies. The companies I'm looking for specifically have increased their dividends to their shareholders for more than 2 consecutive decades. That's 20 years. Well, 20 years of being consistently profitable, okay, fine. So how do we get from that list and bring it back down to what you say ethically? Because I'm not quite sure what you mean by that, but that's okay because we're all different. Okay, for me, if the company's profitable, yeah, I'll invest in it. That's about it. And I really don't pick favorites, even though some of them do pop up over and over and over again. Well, it's just the way it is. All right, so let's get started tonight. I'm going to run through a few and just, if it makes sense, great. If you have any questions, just let me know. I have no problem whatsoever answering whatever questions you want. Now, it's about 9:30 at this moment in time, and we're going to go all the way until about 11:15. Then at 11:15, I'm going to stop looking at stocks, and we're going to just answer all the questions. Because I want to get out of here by 11:30. I think that's fair. Guys, ask whatever questions you want, but do me a favor, only ask the question once. I will go through each individual question one at a time. Just give me a little bit of time. When you ask a question, it will get answered. It might not be immediately, but I will answer it before I sign off tonight. All right, so what are we looking for? All right. Now, where this trading strategy came from, I think it was 15? No, wait a minute. We're in 2015. let's say 17 years ago. Holy shit, 17 years ago. 2008, my 9-year-old daughter asked me, would you do 15 to 10? Okay, Tattered Ginger, it all depends on who they are and what the numbers look like. So it's a possibility, okay? I can't give you a guarantee, but I would take a look at it and see how it looks. So as I was saying, in 2008, my 9-year-old daughter says, hey, Daddy, what are you doing? Can you teach me? All right, so here you go. How do you teach a 9-year-old, 9 years old, how to trade stocks when most adults are having a difficult time with it? A lot of people have no clue how to do it. So how am I supposed to teach a 9-year-old how to do this? Antoine got a dividend from Macy's the other day. Thanks for the strategy. Hey, Antoine, glad to hear it. All right, so with my 9-year-old daughter, here we go. It had to be simple, safe, predictable, consistent, no way for her to lose. 5 rules that I came up with. See, the criteria, simple, safe, predictable, consistent, no way for her to lose. That's the criteria. That's what it had to be. So I came up, you know how to do that. Go to the bio, find the stuff. Okay, from there. What I am going to show you is how to do it and how I do it. And we're actually going to do a couple of practice runs. We're actually going to buy some stocks and show you how it actually works. So, hold on a second. That being said, rule number 1, never buy something you don't understand. Or, better put, never buy something you don't want to hold on to for the rest of your life. If you don't understand it and you don't know everything you need to know about it before you buy it, well, just don't buy it. You should know everything there is to know about a stock before you put your hard-earned money into one. That's just my opinion. I could be wrong. I have been pointed out many times that I have been wrong. All right. That being said, rule number 2, never sell at a loss. It kind of defeats the purpose of the game. Rule number 3, consistency of profitability. Now, I like companies that have 20 years, 2 decades of consistent profits. Rule number 4, weekly options only. So if you have something in your mind that you want to ask me, well, make sure the company has dividends. Make sure the company has weekly options. Okay, that's just, a favor. Other than that, we're just going to be wasting our time. Okay, weekly options only. Monthly options just don't work. If you don't understand the stock, well, then don't ask me. Never buy something you don't understand. Okay? Now, that being said, let's get started. We have a couple to take a look at. Muddy Island Productions. Why the spread between the bid and the ask so far apart? Okay, Muddy Island Productions, the difference between the bid and the ask is basically the spread. And yes, it is a lot further apart and now after hours than it is during trading hours. Now, all these numbers are going to change as soon as the market opens at 9:30 in the morning. We're just using these as a rough idea of how to do the equations and how to do the math. Just to give us an idea, does it make sense? Do the numbers work? Now, when the market is open and all these numbers change, the mathematical equation doesn't change. It stays the exact same. Okay? You buy it at the ask price, you sell it the covered call at the strike price, and the premium is what you collect on the bid. Okay? Is it 1% or more? Okay, so, wait a minute, I wasn't finished. Weekly option. And rule number 5. Okay, rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Or rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. And then rule number 5, make sure all the numbers work. Now, like I said, the equation. What am I buying it for? What strike price am I selling? What am I collecting as a premium on the stock option that I'm selling? Now, when I say simple, safe, predictable, and consistent, let me explain. Simple Well, the easiest and simplest strategy is just to buy a stock. Just buy it. That's the easiest. But there's no profitability there until you sell. Okay. So, the second simplest strategy is a covered call. That's where you buy the stock, okay, at the ask price, the current price. You sell the stock to somebody else for basically the exact same price you paid for it using a strategy called a covered call. Now, there are literally hundreds of videos on YouTube that explains what a covered call is. Let me simplify it. You're buying a stock at a certain price. You are then going to turn around and sell an option. It's actually an insurance policy. We'll get into that a little bit later. But you're actually selling somebody the rights to buy it from you at a certain price by a certain date. Now, the dates that we're looking at are right here. 21 March, that's this Friday. 28 March, that's next Friday. 4 April, well, that's 3 Fridays away. 11 April, 17 April, 25 April, so on and so forth. Every single week we have a new option. Predictability. Wait a minute, consistency, sorry. Consistency every single week. Now, predictability would come into, well, I know exactly what I'm going to make before I even do the trade. Well, it's simple because you have the second simplest strategy. The simplest one is just buying the stock. Second would be buying a stock and selling it to someone else at a certain price by a certain date, called a covered call. Well, if I'm making 1% every single week, because that's what I'm looking for, simple, safe, predictable, consistent, 1% per week. Now, for those you didn't get Excel in math, 1% a week for the whole year comes out to a little over 50% per year. Okay? If that sounds exciting, great. But here's the downside. You actually got to do something. It's not like, hey, throw your money into the ring and let it happen. No. You have to actually do something. Why? Tony Parker. Why only companies with dividends? Other stocks could also be profitable for covered calls. Tony, you are 100% correct. Now, Tony, I'm going to explain to you in about 2 seconds, well, maybe about 2 minutes, exactly why I only do dividend stocks. Okay, so sit tight. I'm going to get to it. Mikey G's in the house. Mikey G wants to take a look at APA, which is Apache. APA. All right, we're going to take a look at that one. How come a covered call doesn't end up being a washable trade? Well, a washable trade is where you buy one and sell another, and basically the profits of one or the loss of the other is offset by the profits or the loss of the second one. So one of them crosses out the other. So if I buy U.S. Steel at 39 and I sell a covered call against it at and collect $1, the stock drops down to 38 and it still gets signed out, and I pick up $1, and then basically the same thing. I'm still walking away with $39. I bought it for 39. I sold a 38 covered call. I picked up $1. Now it goes to 38. Somebody buys it from me at 38, but I collected $1 on it, so now I'm actually walking away with 39. So I bought it for 39, sold the 38, collected $1. That's 38 plus 1 is 39. That's kind of the same thing, but not really, because it's two different entities. One's a stock, one's an option. A wash sale would be when you buy a stock and then you sell the stock at the exact same price later on, or whatever. Mikey G, we're going to take a look at Apache in a little bit, all right? All right, so Tony, let's take a look at why I only do dividend stocks. Now, we looked earlier, actually last week, 9,976 different companies. Now, there's only two different types. One takes all the profits and put it back into the company for capital growth. What's capital growth? I buy it for $5 and it jumps up to 20, 30, 40, $100. That's capital growth, where the stock increases in value. Those companies take all their profits, put it back into the stock, and it grows and grows and grows and grows and grows. And who knows, 5, 10, 15, 20, 30 years from now, I can cash in and make a big bunch of money. Well, that doesn't help me out. I'm retired. I need cash flow. So yeah, cash flow could work with companies that don't have dividends, but let me further explain why I like dividend stocks. Now, dividend stocks, these companies take a portion of their profits and give it back to the investors. Okay, so I'm going to change a few things on the screen and then I'm going to explain it to you. There we go. All right, this is month of April. We're not in the month of April yet. We're still in the month of March. All right, here we are, month of March. Today's date would be the 16th. So tomorrow's St. Patty's Day. Then we get the 18th, 19th, 20th, 21st. So the 17th or the 21st, that is this week. Okay, it is officially a week number 12. Week 12. Now, week 12 for the year and also week 12 for the first quarter. Now, there's 4 quarters. We all know that. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Okay, so 13 weeks in each and every individual quarter. First week of the first quarter looks exactly the same as the first week of the second quarter, which coincidentally looks the exact same as week number 1 of the third quarter and the fourth quarter. 3 weeks. Most of these companies pay every 90 days. Well, every 90 days. So we're looking at the same stocks over and over and over again. So, Tony Parker. The reason why I like dividend stocks, the main reason, besides the fact that they're consistently profitable, those are the ones I like, easy to find, easy to read, easy to understand. The main reason I like them is what you see behind me is a calendar, March 2025. That's this week, this is this month right here. Okay? Each one of these green dots represents a company that has consistently increased its profits for more than 25 years. That means every single year they have higher and higher and higher dividends, or consistently profitable year after year after year after year. April, what's happening? April. All right. Here's the thing. Tony, if you did not know this, there's 4 dates to remember. 4 dates to remember when you're investing in dividend stocks. Date number 1 is the announcement date. The announcement date. That's when the company announces, hey, this is how much money we made this year, and this is what kind of a dividend you can expect on this day. Well, it's the announcement. It's telling you what they've done and when they're going to pay you the dividend. Okay, fine. Date number 2 is the EX dividend date. Okay, EX dividend date. That is the last day the stock trades before the dividend is paid out. Date number 3. Date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4. Payment date. Well, that's when you get your money. Now, Tony, the reason why I like dividend stocks, I got Walmart highlight right there. Okay? Before they pay out a dividend, okay? If I wanted to collect a dividend on Walmart, it's the 21st. It is this Friday. If I want to collect a dividend, I got to buy this stock before Friday. Okay? I can't buy it on Friday and get the dividend. Nope, I got to buy it the day before. The 20th, the 19th, the 6th, the 26th, the 28th, the 3rd, the 11th, any day before this day. It's kind of like a big, huge sign. You go to the store and it says open 9 to 5. If you show up at 5:01, you don't get it. If you show up at 8:59, you don't get it. Okay? Now, if I want to buy that stock because it got the dividend payment right there, Stocks have a tendency to increase in value or increase in price just before the EX dividend date. Now, let me explain it in another way. Stocks move for only two reasons. Only two. One is called an unknown reason. Well, what can an unknown reason be? Well, an unknown reason could be a natural disaster. Okay, hurricane, tornado, flood, tsunami, earthquake, anything like that. That's unknown reason. It just pops up out of nowhere. Or perhaps an unknown event, such as the Exxon Valdez crashing in the Northwest and spilling oil all over the place. What happened to the stock? Dropped like a rock. Same thing with British Petroleum. They sprung a leak in the Gulf of America, and then oil all over the place. Their stock dropped also. Okay? Now, from there, well, you have, let's say, Apple had a lawsuit last year, had to pay billions somewhere in Europe. Their stock dropped. 3M did the exact same thing. Their stock dropped. I think it was last year in February or March, I think, somewhere in that area. But the stock dropped because of that. An unknown event is something you cannot see coming. It just pops up and you have to react to it. Well, that's one reason the stocks move. Working 4657, how are you today? Reason number two is called a known reason. We know something's around the corner. We know something's approaching. We know it's going to happen. Well, what's that? Earnings, dividends, stock splits, announcements, new product releases, or seasonality. Let me explain seasonality for a minute. Well, maybe an example might help you out. Okay. The one I say, it usually clicks really quick. People say, oh yeah, that makes sense. All right. Why does Weight Watchers stock go up the first week of the year? Come on, you guys should know. That should be easy. Hershey stock goes up the second week of February. That one should be easy also. Now, most oil and gas stocks go up in March and April. Why? Here's the thing. March and April. Now, a lot of people in the Northern Hemisphere, or something in the, Northern, because we're here in the U.S., the Northern Hemisphere have what's called winter, and it gets cold. What happens in winter? Well, people turn on the heaters. What do heaters run on? Oil and gas. Okay. Well, why does the stock go up in March and April, not the other months? Well, the interesting thing about oil and gas is you can buy oil and gas anytime you want. You can buy it any month of the year. But what happens simultaneously in December and January? Sometimes November, but mostly December and January. People turn on their heaters to keep their houses warm. Well, by the time end of February, March, and April come along, well, their tanks are dry and everybody's calling for oil or heating oil or gas, whichever it is. So they're all ordering at the same time. But throughout the year, you can order it anytime you want. But once you turn that heater on, yeah, your tanks will be empty by March, and then you're refilling. That's why oil and gas goes up in March. Why do gas, like Hess, Mobil, Exxon, why do they go up in May and June? Well, because all the kids are getting out of school, and that's when they want to go for a summer vacation for the most part. So if you take a look at certain events that happen in society, okay, you get Christmas, you get New Year's, you get Thanksgiving, certain things, and it's all based on the calendar. That's why they call it seasonality. What season? Well, we know when January's here. Okay, we know what happens in December. Okay, that's seasonality. So they move for two reasons only. So hopefully that was long-winded answering the question. Stocks have a tendency to move up just before the EX dividend date. Okay, it is a known event that shows me when and where a stock is going to move. Okay, so if I like Walmart, I'm going to buy it 2 weeks before the EX date on a Monday because I am a seller of stock options. I'm a seller. I'm not a buyer. I don't buy options, and there's a reason why. 80% of all options expire worthless. So why would I buy? Why would I want to be on the 20% side? If 20% win and 80% lose, well, I want to be on the winning side with odds and probabilities. So if I'm selling an option, well, 80% chance I'm going to be right. And if I am wrong, I just roll it forward and hope for that 80% again. All right, so hopefully, Tony, that answers that question. Okay, now stocks that do not have dividends and do not share their profits, I'm 61 years old. I have no desire whatsoever to go back to work. I've been working since 1973, and if I don't have a consistent cash flow coming in every single week, I would have to go back to work. Okay, so however much money you think I have, I don't. I have enough to live comfortably, and I'm okay with that. Now, I could go back to work if I wanted to, but at this moment in time, I don't. I'm kind of enjoying being retired. All right. Let's look at a couple more questions. Okay, so we answered that question. Is money market good? Okay, Haley Bob, I'm not quite sure what you mean by is money market good. Okay, yeah, it has to be a more specific question than that. I put 20% in money market. Will it be worth it? Okay. Sheed we hear. Well, good evening, and Sheed. So, Haley, I'm not quite sure which money market you're putting it into and why. Okay, see, all my money's invested at all times. I invest in the American economy. Okay? I like my neighbors. I like my children. I like my nieces, nephews, aunts, uncles, sisters, brothers, cousins, the guy down the street. He's kind of okay. They all work and live in the United States, which means they all work for U.S. companies. So if I invest in the U.S. economy, well, every single week I get a covered call and I get a premium every single week, which is roughly 1% or more every week. And that works for me. That's over 50% per year that I make. And I'm going to show you how I do that, and we're going to actually do a few samples. All right, all that being said, let's keep on keeping on. We got 45 questions to go, and then we're going to start. Well, guys, give me some stocks to take a look at, and then I'm going to write them down. We're going to take a look at them one at a time. So far, we've got two. We got Macy's and Apache. All right. And then we're going to go from there. So let's keep on going. How come covered call? Uh-oh. Sandra Taylor, thank you for that. Why only companies with dividends? We already talked about that one. Mikey G, we're going to take a look at Apache in a couple seconds. How come a covered call doesn't end up being a washable trade because it's two separate entities? Quantum Antenna, how are you today? I'm in it at 32.50. That's Apache, right, Mikey? Let's take a look at this one. That's not what I want to see. I want to see this right there. All right. Don't get old. It sucks. Here comes the glasses. All right. Apache. APA. APA. Mikey, you're into Apache at 32.50. Holy shit. When did you buy Apache, dude? Wow. Okay, so Apache's now at 1961. Alrighty. But let's take a look at the numbers here for a second, Mikey. All right, now, as you'll see, I approach this systematically. It means I do the same thing over and over and over and over again. It's always the same. First, I want to take a look at the one-year chart. And when I look at the one-year chart, I'm looking for 5 things. 5. Number 1. The high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it now? And number 5, so we take our little finger and go like this. Up, down, up, down, up, down, up, down. Now she's going back up. All right, so she's bouncing off the bottom here. And you will notice, you probably have heard this many, many times, buy low, sell high. Well, guess what? You're not going to get any lower than the low of the year, and that was a couple weeks ago. Okay, a couple of days ago, maybe. We're going to take a look at that a little closer. That's the first thing I want to look at. I want to take a look at the one-year chart. I don't want to buy at the high. Automatic, no. At the low, I want to see exactly where it is because it hits the bottom, it turns around and goes back up. They always do. Stocks do two things and only two things. They go up and then they go down. And then guess what they do after that? They go up. And then after that, they go down. Yeah, okay, anyway. All right, so look at the spread. 11 to 20. That's a big spread. All right, I'm going to take a look at the very last traded price on Friday, and that was 1961. So the closest one to that is going to be the 20. Okay, so if I buy it at 1961, I sell it at 20. The closest strike price, 20. How much is that paying? It's paying between 26 and 31. So 26 is more than 1% of the 1961. So that is a yes. Well, the numbers work out. Remember rule number 5? Make sure the numbers work. Okay, so we're going to go. And we're actually going to do a sample trade on this one. So, Mikey, here's my thought. Okay, a year ago, 32.19. The high of the year, 36. And that was, why can't I see that? There we go. 36, and that was back in the first week of April. Well, look at the last 90 days. Here we go, last 90 days. The high, the low, where was it? Where is it? Okay, down, up, down. Now she's going back up again. Okay, fine. That works for me. Now, looking at this chart here gives you a good idea where it's going next. Okay, here's the high, here's the low, and look, here's the bottom, which was 2 weeks ago. Now she's going back up again. All right, hits the bottom, goes up. Hits the bottom, goes up. Hits the bottom, goes up. Well, here's where we are right here. Fine, let's look at the last 30 days. Now, the last 30 days gives me a better idea of where it's going next. Well, this week. Well, because it's kind of easy to what do you call it, plot out or map out or guess where it's going next. Well, 30 days ago, right here, 24. She drops down to 17.50. Well, 24 to 17, that's a $7 drop. A $7 drop on a $24 stock is right around 30%. Close to 30%. Okay? Okay, now, but here's the bottom. So 1, 2, 3, 4, 5, 6, 7 days going to the upside. Now, it's a little bit of a pullback on Thursday, but not that huge, but still going in that direction. Okay, so a couple of questions you need to ask yourself. Do you like Apache? Do you like it at this point? Now, Mikey, you're into it at 20-something. I forget what it was. But here you're in at 32. Oh, okay. Now, me personally, I would take a look, me personally. I want to go far enough out, but not too far out where I'm not bringing in any money. Because I'm going to give you my cow analogy, okay? Because I think, it is what it is. If I buy a cow and the cow gives me a gallon of milk every single week, great, I'm fine, I'm wonderful. That's what I'm looking for. Now, all of a sudden, I wake up and one day, the cow only gives me a half a gallon. Well, I don't get rid of it. I just, deal with it, take the half a gallon, and wait for it to recover. Now, 1961, it is in an upward trend. Before we go any further, let's take a look at the seasonality. Now, we talked briefly about seasonality a while ago, but let me explain it to you in this manner. Okay, this chart here, okay? All the way to the far left is January 1st. All the way to the far right is December 31st. The blue line here represents the movement this year. Now, the red line is 10 years of data. The highs, the lows, all that kind of nice, neat stuff. What does this stock normally do at this time of year? All right, well, the blue dot right there just so happens to be Friday. So let's zoom into that and look forward. What are we looking for going forward? Okay, so here we are right here. 14th, which is Friday. Dips a little bit, and then she shoots up. Can you deal with a little bit of a dip before she goes up? You're going to have to if you already own it. But here's the thing. Okay, let's go back to, whoops, not too far. All right. All right, so we're currently at the $20 area, which is right here. So at the money, it's 20 cents. Then it goes to 13, then it goes to 5. Mikey, the 21, which is way up here. Okay. Here's the 21 right here. It's going to bring you in something, anywhere between 5 and 8. Now, 5 and 8 is not the greatest in the world, but here's the thing. If you do 5 to 8 every single week for the whole year, as it's going back up, because here's the bottom. She's definitely going back to the upside. How far does it have to go before you hit your target? And your target is 32.50. Hold on. ODUS. Which of the two stocks is more valuable in your opinion, Google or Apple? ODUS. We all know that Apple is one of the biggest corporations. Google's not even close yet, but I don't trade Google. The dividends are horrible. Ken C, what's up, everyone? What do I think about Southwest? We'll take a look at Southwest. LUV. We'll take a look at that in a little bit. Ken, hold on a second. All right, so as I was saying, Mikey, the 21s, it looks like it's far enough out for the next 5 days. But the way this thing is moving, it's going very slow. It might hit 21 by Friday. More than likely, it may or may not. We don't know. Okay, I don't know. I can't pretend that I do know. But if you're in for it at 32, you got a couple of choices. Now, you may not like the 21, which is this week. You may like the 28. So let's get out of this one and go to the 28s. Well, the 28s, you can go all the way down to, what is that, 22. And bring in 4 to 7. But the 22 is way up here. But that's another whole week. That's 2 weeks. And could it hit there in 2 weeks? It's almost the same as saying it's going to hit here 1 week and then there in the second week. I don't know. Now, Mike, no matter how bad it seems, some money is better than no money. See, anytime I have a stock, and I do have a few of them that are down. I mean, I got U.S. Steel at 41. Okay, I got U.S. Steel at 41, and I got that back in December. Well, I'm having a difficult time getting out of it, but here's the thing. Okay, I have no problem. Right now it's at 39. Okay, I have no problem whatsoever selling the 40s or selling the 39.50s or even selling the 41s because U.S. Steel has some nice premiums, where Apache's premiums aren't as good. Okay, now I don't have Apache, and I think I got in and out of Apache really quick. Okay, a melodic angel. Can you lose money with covered calls? The only way you can lose money with covered calls, Angie, is by not paying attention to what you're doing or hitting the wrong button. Can you see a decline after earnings in May with a new policies going into place? Well, Ken, we're not going to see anything until May actually gets here. Okay, I can't predict the future. We're into the late... Are we in March? Yes, we are in March. Does the utility of Google in various hardware sway your soft spot for dividend? Okay, ODUS. Now, I always tell people, anytime you're dealing in the stock market or investing, you really, really need to have on your side a financial website so you can check out details. Okay, so I'm using Yahoo Finance. And we're going to look up Google, called Alphabet, whatever. And I want to look at historical data, which is right here. Okay, news, research, summary, all that kind of stuff. And it gives me a better idea of the numbers. Well, I could look at the quarterly reports and the annual reports, or I can just go straight to the data stream. The data stream is, first column is the dates. Okay, every single day that this stock has been trading is going to be available here. Okay, the 14th of March, 13th of March, 12th of March, so on and so forth. Now, next column is the opening of the day, the high of the day, the low of the day, the close of the day, the adjusted, and then the volume. All the information about the stock and the stock price is right here. Now, I don't want to see all this crap. I want to see just the dividends. Okay? Now, a company is profitable and they're going to share their profits with their investors and they're going to pay you a dividend. So I want to see only dividends. Okay? And then I want to see the maximum amount of dividends. And look at this. August 19th, 2004. Okay? To March 17th, 2025. So let's see what the dividend is for Google. Maximum amount. Well, there it is right there. 4. Google has paid 4 dividends. June 10th, 2024, September 9th, 2024, December 9th, 2024, March 10th, 2025. That's it. Not even 1 year of dividends yet. Okay? No, this is not on my list because I'm looking for consistency of profitability. That's not telling me anything. It has 1 year of dividends. The company's what? 21 years old? 21 years old, and they've only paid 1 year of dividends. That's it. So, no, it's not on my list. The numbers just don't work. Next. So, that's why I don't like Google. I like 2 decades of consistent increased dividends. Tony? Thank you for that, Tony. What is the calendar called? The calendar is called an EX dividend calendar. Andy Sajak. I'm a maintenance tech at Leiden Bessel. What's your thoughts on their dividend or expand my horizon? You actually got to give me the ticker symbol so I can take a look at it. Sandra Taylor is live with more than 10 friends. Well, alrighty, Sandra. Thank you. What is the calendar called? Okay, now user 951672483826. It would be very helpful if you ask the question once and only once. Okay? I read each and every single question I will read. It does nothing but aggravate me and piss me off when people ask the same exact question over and over and over again. Okay, that calendar is called an EX dividend calendar. Angie, when do you do a covered call? How soon do you receive the profits? And do you still hold the shares? Okay, so Angie, here's the thing. With a covered call, you buy the stocks. You own the stocks. You have the right to do whatever you want. Now, when you sell a covered call against the positions you have, you get that money instantaneously. I do most of my covered calls on a Monday, and there's a reason for it. And I do it first thing Monday morning because there are 5 days in a regular standard week: Monday, Tuesday, Wednesday, Thursday, Friday. So 100% of the week is available to me on Monday. If I wait until Tuesday, I just lost 20%. If I wait until Wednesday, I just lost 40%. So no, I do all my trading on Monday morning. It's when all my money is invested Monday morning. And the money is the covered calls that I receive, those premiums, well, they go into my account instantaneously. Now, they're released the very next day, which means Tuesday, I can start paying some bills. That's me. It's set up the way that I want it. You guys got to figure out what works best for you. For me, most of my trading is done on a Monday, and I do my selling on a Friday, usually. All right. Oh, down, back again. Terry. Afternoon, Miss Terry. Moyet James. How are you doing today, Moyet? David D. What's happening? I'm really a rose. Alrighty then. What are your top 10 dividend earning stocks for long term? What's in your portfolio? That's two different questions. Question number one, what 10 stocks are in my portfolio long term? I think it would be Kohl's, Macy's, Nordstrom's, Ford, General Motors, AT&T, IBM, Home Depot, Lowe's, Kohl's, and US Steel. That's 10 good ones. Now, when you say long term, my idea of long term is 30 days. Longest I've ever held anything was 9 months. I didn't do it because I wanted to. I bought it, it went down, and I refused to sell at a loss. So, there you go. All right, so let's keep on going. What's in my portfolio? I just told you it was in my portfolio. Michael Daniels, Power of Publish. How are you today? AMZ, if we want to get your method of investing following the trend 3 days to the upside. Okay, AMZ. I'm sure there's more to that question. What about ExxonMobil? Tay Sanders, what's happening? ExxonMobil, we'll write that one down. XOM. We'll take a gander at that one. What if you don't have much money? How can you profit weekly from dividend stocks? Okay, Angie, here's an idea. Now, remember what I said a few minutes ago. All right, remember what I said a few minutes ago? Stocks have a tendency to go up just before the EX date. Remember I said that? These all dots, these are all EX dates. Well, let's take a look at these right here. ADP, Albemarle, CB, Chubb, Coca-Cola, and T. Rowe Price. They're all, okay, they all have the EX date last Friday. So 2 weeks before Friday, 28th, on Monday would be the 24th. So we're going to take a look at all of these from the 24th until the 14th and see if they went up in value. First one on the list is ADP. ADP. The 24th, right there. Okay. The 24th is here. Okay. Look, stock went up. It went up. But how far does it go up? So people think just because the stock goes up, that's the time to jump in. Okay, fine. Jump in, but where do you get up? So if I was going to jump in here, okay, the 24th, and it went up, it was at, 315, and it went up to 322. Well, what's 1% of 315? Well, that's $3. So it was at 315. 315, it jumps up to 322. Well, that's more than 1%. I'd be in, I'd be out. Now, more specifically, Market Watch right there. All right. ADP, come on, has a $1.54 dividend. Okay, Angie, you ready for this? Okay, right here, see it? The dividend amount, ADP, $1.54. 2 weeks prior, on the 24th. So I want to jump in the 24th. Okay, so the 24th is right here. Okay, the opening of the day, 310.62. What was the dividend? One and change, wasn't it? No. Market watch, that's what it was. $1.54. Okay, so the opening, 310.62. The dividend is $1.50. So if I buy it first thing Monday morning, okay, 10 days prior to, or 2 weeks prior to, on a Monday, be the 24th. I'm looking for $1.54. It opens up at 310. Well, at $1.54 will be my profit, so that would be 311.12, right? Because $1.54 plus the opening price, 310. Okay, $1.54 would be 311.12. Well, the high of the day was 314, so I'd be in and I would be out on the same day. Oh, Des, you appreciate that in reason. Okay, thank you. Parisville. Guy in France, 3 a.m. Bonjour, bonsoir. Comment ça va toujours? Ça va bien, non? I want to say have a good day and good life. Every good thing happen to you. All right. Merci beaucoup, bonsoir. Nous allons bien. Bonne soirée et bienvenue. Have a good night. All right, so anyway, that's just one of them. Let's go look at another one. Another one. ALB, Abelmal. Has a 40-cent dividend. We're going to go to the 24th also for Abelmal. ALB. And it was 40 cents, right? The 24th. Where's the 24th? 24th. Well, that don't look good, does it? Wait, where's the dividend? Dividend's right there. Okay. Well, this one didn't work. Okay, she opened up at 90.64. Actually, she did work. Okay. So let's go back again. Abelmal. ALB. 40 cents. All right. So, 2 weeks on a Monday, the 24th. We're looking just 40 cents. You ready? Okay, the 24th right here. See, the 24th, the opening is $90.84. And she jumped up to 91.41. Well, that's more than 41 cents. Okay? So yeah, that one worked also. So next, CB, which is Chubb Corporation. 91 cents for Chubb. CB. Whoops, no, that's not what I wanted. CB. The 24th. 24th. I don't know. What do you think? 24th is here, and just step up. So, yeah, to Chubb. Next, Coca-Cola. 51 cents. KO. $10 days. Okay. 51 cents. All right. 70.84. 71.83 was the high. You'd be in and out on the same day. All we're looking for is the dividends equivalence. Same thing. So I'm hoping that gives you enough information. Who was it that again? Angie? So Angie, you can do basically what my grandson does, which is called dividend capturing. Well, it's kind of like dividend capturing 2.0, where you buy the stock 10 days before the EX date. See the EX date's right here? 10 days on a Monday, which will be the 24th. You buy it on that day at the opening, Add the dividend, 51 cents, to the opening price, 70.84. Your exit's going to be 71.24. Because you just want to capture the dividend, which is 51 cents. Okay? High, low, blah, blah, blah. Interesting. Now, Thinkorswim is one of the few companies that actually do what I like on that one. Guy in France. No Nintendo nada. KLS. Is that no hablo español o muy poquito español? Invest right, dude. I haven't seen you in a while. Hope everything's good. Good luck to you. All right, so Angie, I'm hoping that worked out for you. It's basically the same thing, but you particularly are using a different strategy. You, with just 3,000, are going to have to do what they call fractional shares. Okay, now fractional shares, you can buy 1.5 shares of Coca-Cola. Well, let's say you want to invest $50 into Coca-Cola. Well, you could. Now, you won't get a whole share, but you'll get a partial of the share, and you'll get partial of the dividend. Or, as the stock jumps up, okay, if you're jumping in at 70.84, and as soon as your stock goes up in the equivalence of the dividend, the 51 cents, oops, right over here, okay, that's when you jump up. Now, you could do what's called a trailing stop loss. So as the stock goes up, your stop loss will go up also. But that gets a little confusing. I just buy the stock when it goes up a little bit, in the equivalence of the dividend, I jump out. Now, it could go higher. Sometimes it does, sometimes it doesn't. The idea is to pick a strategy and stick to the strategy. For me, it's a good quality stock. Buy it at a certain price. Sell it for someone at the exact same price I just paid for it, and collect that premium. And the premium is usually 1% or more. Okay. AMZ, sorry, went too soon. How much do you suggest we start with? Okay, AMZ, I know nothing at all about you. I cannot give you that answer. Sorry. Tony Parker, thank you. You're welcome. AIG Robert, how you doing? Gilbert, what's happening, Gilbert? I've never met anybody named Gilbert. How are you doing, Abert? Ooh, AC/DC, man. I was cranking to some AC/DC the other night, cruising around on my bike. Michael Rowe, what's happening? Oh, Michael Robbie. Okay, didn't pull up that way, but okay. What is that calendar called? Okay, user, dude, seriously. 9516724838263. Why the hell couldn't your parents name you like Peter? Peter's easy name. Okay, the calendar is called an EX Dividend calendar. You go to Google, EX Dividend calendar. A whole bunch of them pop up. Kryptonite, what are your holdings, brother? I hold a whole shitload. I get 7 different accounts. I get a whole bunch of crap. All right. That's right. I'm doing fine. Thank you. No intents or not. Okay. All right. Let's keep on keeping now. Tony Parker, free the oppressed. Okay. Free the oppressed. Okay. You think Palantir go up today? I honestly don't know. Palantir is not a stock that I look at. Okay. It's not 20 years old, and it doesn't have 20 years of increased profits. Jeff Jerzik, chicken wings. What's happening? All right, where are we? Ooh, it's called Calendar on Schwab. Thank you, Jeff Jurassic. Jurassic. Okay. Do it. Microsoft. We'll take a look at that one. MSFT, Target, TGT. We got only 6. You guys only get 6 for me to take a look at. ExxonMobil's on there. Microgerm Shield, NQ. I've never heard of NQ, but we'll take a gander at it. ET. All right. User 3059 wants to take a look at Energy Transfer. All right. Siri and AA, which is, oh, don't tell me. Siri, SIRI, Alcoa. Hey, Melatonin wants to take a look at AT&T. Cool. Since April of last year, Mikey G, I seriously hope you have been writing a covered call, even if you go 4 strikes out of the money. Okay, seriously, Mikey G, you and I, you're here all the time. Great, awesome. I love it that you're here. And I'm hoping it works for you. But sometimes I wonder, okay, even if you're getting 5 cents or 3 cents a share every single week. So let's say hypothetically, let's get the calculator out here for a second. Okay, here's the calculator, clear. Now let's say hypothetically you have 500 shares. Okay, just 500 shares. Now you said you got it at 32.50. That's how I recall. Now, 5 cents per week. 5 cents per week, Mike. Let's multiply that by 52, okay, because there's 52 weeks in a year. That's going to come to a grand total of $2.60. That's not including the dividends. Because remember, we get dividend stocks, we collect the dividend. All right, so hypothetically, 5 cents per week, which is 2 to 3 strikes out, okay, multiplied by 52 weeks, because there's 52 weeks in a year, comes to a total of $2.60. Okay, so you bought it for $32.50. 32 divided by $32.50 comes to a grand total of 8%. Okay, so here's the thing, Mike. Now, this is for the other folks too that have this in mind. Now, Mike bought Apache, APA, at $32.50, and it's down quite a bit. Let's pull up the chart so you can take a look. APA. Wow. Nice, Mikey. Check this out. In the last year, Mike, APA, Apache, 25, 44, 25, 117, 25, 1, 25. Okay, so that's $1.44 to 61, 361. Okay, so you've got additional dividends of 361 in the past year. Okay, wait a second. You said in April. Yeah, April's here. So you got that dividend, that dividend, that dividend, and that dividend. Okay, so 361 here plus the 260. So let's go back for a second. Let's get that calculator back up here. Okay, 260 plus 361. Okay, clear that. 260 plus 361 in dividends. Okay, count the dividends. Okay, 25, 44, 25, 117, 25, 1, and then the other 25 right here. Okay, so that gives you a grand total of 621. This is only if you've written covered calls 3 strikes out and it's only 5 cents. Okay, you may get more, you may get less. But on average, let's say just 5 cents a week per share. And you got 500 shares. Okay, so 621 is what you're getting. And then you divide it by 32.50. Okay, that's 19%, Mikey. Okay, 19%. Now, your goal, I'm assuming, is to get rid of it at 32.50. Until it hits 32.50. Okay, so you got back in April right here at 32.50. Okay. Dividend. You know, one dividend and a special dividend. One dividend, special dividend. One dividend, special dividend. One dividend, special dividend should be coming out pretty soon. But yeah, the stock is down, right? But you're collecting dividends that come to over 8%. The dividend alone is about 8%. Okay. And then you're collecting the premiums every single week. Hypothetically. You may or you may not. Now, you may think 5 cents a share every week is not enough, but then you add it up over the end of the year along with all the dividends you collect. Now, remember rule number 1, never buy something you don't want to own for the rest of your life. If you like Apache, I don't mind Apache. It's a nice company. I jump in, I jump out. All right? Now, you had it for a while. This is what it's done in the last year. Okay, now she's turning around, going back up again. See, look at this. Down, up, down, up, down, up, down, up, down, up, down, up, down, up. if you always, now you're in 32.50. Okay, the first week I'm assuming you sold a 32.50 call, you got a premium, and then she dropped. Okay, now you have an opportunity to sell. Anyway, let's just move on. Mikey, something is better than nothing. And then before you came here, all right, because you've been here for about a year. Okay, great, thank you. Before you came here, most people just buy a stock and hold on to it for decades, years, decades, until the stock jumps up. Okay, so you bought it at 32.50. Great. Now she's down here. So you do dollar cost average, you leave it alone, just what happens. It's totally up to you. Me, I would get 3 cents, 2 cents, 5 cents. Something is better than nothing. And each and every penny, if it increases every single... See, if I'm bringing in a premium every single week, that's 52. And it adds up. Okay, no. The dividend, 25 cents. Not a lot, but it's consistently coming in. All right, so let's keep going to the next one. Armstead. Guess. No idea what that means. Alex the Great. You want something, Alex the Great? I actually, back in 2003, went to Moscow, and I actually went to Alex the Great's house. It's not a house. Things like a freaking palace. It was huge, and it right on the water. Nice. All right. Is there a list of companies that offer dividends to research and invest in? Absolutely. Alex, do you have a pen and paper handy? Paper, crayon, mascara, lipstick, write it on the wall? I don't know. Okay, you ready? Here we go. Google Dividend Kings List 2025. That's 54 companies that have increased their dividends for 5 decades or more. List number 2, Dividend Aristocrats List 2025. I think it's like 67 companies that have consistently increased their dividends every single year for 25 years. Now, the Dividend Champions List 2025 is about 150 companies that, you guessed it, increase their dividends to their shareholders again for another 25 years. Now, there's a difference between the aristocrats and the champions, and you can probably tell by the name. The aristocrats are a little snobbish. It's a little bit more difficult to become an aristocrat than it is to become a champion. Anyway, it is what it is. List number 4, the Dividend Contenders List 2025. Now, these companies is about 300 that have increased their profits to their shareholders for 10 to 24 years. Not quite at that 25-year mark, but 10 to 24 years. And then just for the fun of it, we're going to throw in Warren Buffett's List 2025, because if it's good enough for Warren, good enough for me. Okay, so hopefully that helps you out. Andrea. I think he means A-S, Alcoa. No, Andrea. Alcoa is A-A. But what is A-S? I have no idea what A-S is. I'll write that one down. We'll take a look at it, Andrea. A-A is 32-something. Okay. LCR, ExxonMobil. It's on the list. We are going to take a look at it in a minute. I got 23 more questions to go through. What are my holdings? I think I already mentioned what my holdings are. Kryptonite, BB. What the heck is BB? All right, let's keep on keeping it. Elvis is in the house. Jesse. Rich Lafray. Good evening. Melissa, how are you? Jesse. Velmar Tercian. I can't read that name. Apple user, how you doing? Zaya, just doing life. Cool beans. Lonely one. Cool. Can we look at ET transfer? It's a dividend. Yeah, I know what energy transfer is. It's on the list. We're going to take a look at that in a little bit. Brandon. Now, Brandon, you're relatively new here. Oh, yo, dude, BB is BlackBerry. The next big thing. I'm not quite sure about that, because they've had BlackBerry back in the 80s, and it kind of fizzled out. Brandon, XRP is not a dividend stock, dude. Can we look at ExxonMobil? Yeah, Tay Sanders, we are going to look at ExxonMobil. Hold on a second. I got 20 some odd questions to go through, and then I'm going to jump and look at more stocks. Healthy Sweep Mattress Gallery, CRO. Ooh, CRO. What the heck is that? CRO. What do you think? I'm heavy at selling at 2 on the long run. Okay, take a look at it. Hey, James, let's check that list. Chasing Jack Slots. We're going to take a look in a second. We got 20 more questions to go through. I like to answer all the questions. William McKinney from Kansas. How are you doing? Miss Mandy, Arrow, what's happening? Natural One. Where do you get these charts software? Okay, Natural One, this is Think or Swim. Think or Swim, you can download it for free. You can use it for a month. I think you can use it for about a month or two for free, but it is owned by Charles Schwab, and they would like your business. And I don't get anything from it. I just like it. I've been using it for 20 years. Okay, 15 years ago, I wrote a book on choosing the best trading platform. I found this one. It's like I've been using it for 20 years. What do I think about AMC and GME? Okay, AMC. GME is GameStop. That much I do know. And APES. APES. I'll take a look at that one. CEL. That's Celsius. Celsius is not 20 years old. ELF, that's a monthly, that's a no. What do I think about Yield Max? Oh my goodness. Nuri Penda. Basnet. Really? You want me to take a look at YMAX? Okay. Pretty sure you're not going to want to after you hear me. Okay, please only ask the question once. Talk about quantum computing, RGTI. RGTI. Okay, we'll take a look at it in a minute, Alicia. Mikey G, yep, I've been getting some money, like 0.25%, maybe 1/3% for a year. Well, Mikey, it's probably adding up. Okay, Brenda Basnet, we're going to take a look at yield at YMAX. Give me a bit. Would you do a covered call on HPE? Angie, hold on a second. HPE, we'll take a look at that. We're about to 20 stocks, and it's going to be, holy cow, you guys keep asking the questions. I want to get a couple more stocks, and then we're just going to breeze through them. DKE. Calio, what the heck is DKE? What do you think about moving everything into treasuries for the short term? Pucker War. The treasury is only paying 5%. Think about it this way. I'm making 1% a week. Even as the stocks are going down, I'm still making 1% a week. Please explain how a covered call works selling on Monday. Okay, 75 COVID. You've been here for a while. You've actually seen me do some examples. All right, Sebastian, SPY. I don't do SPY. Sorry. Okay, I will put SPY down, and I'm going to show you why exactly I don't do SPY. So sit tight. We'll get there. Keep on going. When you say that you do your selling on Friday, what exactly do you sell? Is it the covered call? Okay, Angie, we're going to get to that. I'm going to show you how it works. Why do you work for TikTok? I don't work for TikTok. This is just a hobby for me. Okay, I'm doing it anyway. See, I've been trading for over 20 years. Okay, it wasn't until about 2 years ago someone said, "Here, share the love. Share it with your fellow man." So that's what I'm doing. I'm just sharing what I do. Now, you may think I'm doing this for you, but I'm not. I'm actually creating a legacy for my children and my grandchildren, a video legacy. So when they get to that certain age, which my grandson's only 5, when he gets to that certain age, he will have videos of how Grandpa, Papa G, that's me, how I did it. So it is a ongoing documentary of how I trade, how I made my money. Now, I got videos going all the way back until 2011 and 2012. So you just so happen to show up in the middle of my lifelong documentary. Okay, it's only been going on for about 10 or 15 years. Okay, you're just here because of the new technology. Now, let me show you something real quick. Okay, this is my webpage, The 10 Minute Trader, because any video you hear me says, hey, this is James from Dividend Stock Talk, brought to you by The 10 Minute Trader. All my trades are posted. These are last year's trades, 2024. I'm going all the way back to the bottom to January 1st, because there's something I want to show you, because you got an interesting question. Why do I work for? I don't work for TikTok. I don't work for anybody. I'm retired. I work here because they let me do this stuff for free. Okay, right here. You see that? Starting date, when I first started sharing this, okay, August 31st, 2011. That's when I first started sharing. This is my very first blog post, August 31st, 2011. Okay, that's when I first started doing this. You're only seeing it now because years ago they didn't have video, they didn't have YouTube. Now, they did have YouTube in 2013. Oops, hold still. Okay, here's a video from Rent-A-Center. I don't know how many guys remember Rent-A-Center from 2013. The 1-year chart, the 90-day chart, the 30-day. Look at the date, March 23rd, 2013. Okay, I've been doing this for a while. You're only here because somehow you stumbled across this page. All right? So I'm doing it anyway. So, as a favor to my children and my grandchildren and my great-grandchildren, I want to make a documentary of my trading career so they can see all the mistakes that I made and hopefully not do the same things. Okay, so no, I do not work for TikTok, but thank you for that. Mr. Darrell, Mosaic, huh? M-O-S. So let's get out of here. You don't need to see that. All right. Never take broke people's advice about money. Rule number 1. Tom Riddle, I agree with you 100%. Sweet Dan, what's happening? And this is not, by the way, Tom Riddle. Ooh, interesting name. Yeah, I don't give advice. Not advice. Okay, James. Hey, James, out of curiosity, do you ever sell at the bid instead of the ask? Sometimes. Seth, what's happening? MS Cloudy, what's happening? Zen, Sue, oh, so be it. How you doing, Sue? Got in 108, sold at 110. All right. Prince, you speak French? Certainement, monsieur. Getch DC. Okay, thank you for that. Angie, so we should buy the stock 2 weeks before the EX date on a Monday and sell it as soon as it hits. Yeah. Soccer King, Misty pays monthly. Yes, it does. But it's not on my list. But I'll take a look at it and explain to you why I don't like it. MSTY. And we're almost done taking these stocks. You guys keep on hitting me. All right. Invest right. Can we look at AMSL? All right, that's it. AMSL. All right, I have 50 questions left to go. I'm going to pause right here. I got about 30 stocks right there. We're going to breeze through these things really quick. Watch how quick this is. It's not difficult. When I said I created this for a 9-year-old, simple, safe, predictable, consistent, and no way for her to lose, well, the 5 rules are: number 1, never buy something you don't understand. And number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, weekly options only. And number 5, make sure the numbers work. We're actually going to do a couple of trades right now. I'm going to go through really quick, and you'll see how quick this actually really is. ASML. All right, first one on the list is going to be Macy's. Okay, so first on the list, Macy's. Put the glasses on. Now, I'm not even going to go through everything. I'm going to say no to Macy's for this week, and here's the reason why. Okay, here's your 30-day high. Here's your 30-day bottom. She goes up, and then she comes back down. Now we're looking for a new 30-day bottom. No to Macy's. But I'll keep an eye on it because I already do own some Macy's. Next, LUV, which is Southwest Airlines. Ooh, that looks interesting. The high, the low, where it was, where it is. Look at the movement. Down, up, down, up. 31.70. We'd be looking at the 32s, and that's going for 76 cents. Now, I don't know about you, but 76 cents is more than 2%. Let's take a closer look. A year ago, we're at 28. The bottom of the year, the end of July, was 23.50. Okay, the high of the year, 36.12, was the beginning of December. Well, here's your 90 days. Okay, 90 days, the last 3 months. The high of the low, where was it? Where is it? Look at the motion. Up, down, up, down, up. Okay, great. Well, let's take a look at the last 30 days. The last 30 days gives me an idea of where do I think it's going next. Okay, 30 days ago, here we are. Sideways, down, and up. Yeah. Gapped up here. There's the high here. She's going up. So here's the question. Do you like this? Before we do, let's take a look at seasonality. What does this stock normally do this time of year? Yeah, I'm not too happy with that one. Okay, down and then up. That's about 2 weeks away. Yeah, I'll wait the 2 weeks for this one. Because look at the current price. Okay. Here's the bottom here, 27. Now it's at almost at 32. So 27 to 32 is $5. Well, $5 on a $27 stock is 17%, roughly 17, 18 from here to here. Yeah, usually when you have this much plus a gap up, probably going to have profit taking soon, and I don't want to be in that area. So I'm going to say no. ExxonMobil. XOM, ExxonMobil. Interesting. High, the low, where was it? Where is it? Look, it's up, down, up, sideways. We're currently at 111. Well, 112. The 112s are going for 188. The 113 is going for 159. The 114 is going for 118. So all three of these right there will give you more than 1%. All right, so let's take a deeper look. A year ago, 112. The high of the year, 126. The last 90 days, right there. The last 90 days. Here's the high, here's the low, here's where it was, here's where it is. Look at the last 30 days. That doesn't give me much to go on. Yeah, I'm going to say no to ExxonMobil, and here's the reason why. Okay, 1, 2, 3, 4, 5, all right here at the 111 area. That seems to be some kind of resistance at this point. Here's your bottom here at 103 and change, and then she jumps up from 103 here. That's $8. That's a little bit, 8-9%. But look where it is. Here's the bottom, here's the top, and here's your resistance right here. Doesn't seem to want to go past that 112 point. Yeah. What does it normally do this time of year? ExxonMobil usually. Oh, look at that. Looks like we got another week for it to find a bottom, and then she rolls up. So maybe next week. I'm going to write ExxonMobil down next week. Ooh, somebody wants to take a look at Microsoft. I don't know who suggested that one, but that's one of my nice stocks. MSFT. Now that looks good. Quick. Okay, it should take you 3 to 4 seconds. 5 tops. The high, the low, where was it? Where is it? Look at the direction. Down, sideways, up, down. Now she's bouncing off of this. The bottom is right there. It's bouncing off of that bottom. That's a great place to jump in. Buy low, sell high. Well, you can't get any lower than the low of the year. Could it go lower? Yeah, but we'll take a closer look and you'll see something. Okay, before we do that, the current price right now, 386. So we'll be looking at the 389. There aren't any but the 387s right here. 835. That's over 2%. Well, that works. Okay. So a year ago, we are at 415. The high of the year, 468. And that was the beginning of July. All right. Last 90 days. Okay. The high and the low, where was it? Where is it? Look at the movement. Down, up, down, up, down, up, down, up. Okay, now it's going up. The bottom was 4 days ago. 4 days ago, 1, 2, 3. 3 days to the upside from the bottom of the year. Now, you can't get any lower than the bottom of the year. So, do you like Microsoft? Do you like it at this current price? What does it normally do this time of year? Normally, Microsoft, look at this. That is a nice move right there. Here's where we are, and look at the movement. Nice to the upside for the next 2-3 months. So let's do a covered call on Microsoft, just for the fun of it. Okay. It's at 287. We're going to do the 287.50s. Let's change. First thing I want to do is I want to change this right here. From single, just buying a stock or buying an option, I want to change that to covered call. So click right there. Here it is right there. Covered stock. So we're going to go and click on that. There we go. Now, the 387, which is right there. Buy that. Now, I'm just going to show you one contract and see what the numbers look like. Now, I'm going to change a limit order to a market order. Now, the reason why I changed to a market order will be filled instantaneously first thing tomorrow morning. The market opens at 9:30. Well, guess what? At 9:31, I'm going to own 100 shares of Microsoft because I'm buying it at the market. Now, the reason why I buy at the market is because I'm doing 2 trades at once. I'm buying stock and then selling the option right away. Okay. Let me do it and hear what it sounds like. Confirm and send. Here we go. Buy one covered call of Microsoft, MSFT, a 100. That is the weekly option, which means it's going to expire next Friday. Let me explain. Hold on. So I'm buying 100 shares of Microsoft first thing tomorrow morning, as soon as the market opens. Then I'm simultaneously selling somebody the option of buying it from me for basically the exact same price I just paid for it. It's right there. Maximum profit. It's already there. Do you remember what I said? Simple, safe, predictable. Well, I know what I'm getting before I even do it. Most people buy a stock and have to wait for it to go up. I honestly don't care if it goes up. I'm buying it, and the only reason I'm buying it is because I like it and I want to hold it for the rest of my life. But will compromise my position and I will sell it at the strike price that makes sense to me. Well, if I'm buying it right now, 385, and I'm selling the 387.50s, okay, and I'm picking up $924 per contract, I know exactly what I'm making. Well, let's put in the calculator and see what kind of rate of return that is. Let's clear this. Now, don't be scared about the numbers because the numbers are always the same. You buy a stock, you sell a covered call against it, and then you get a rate of return. Okay? The more money you have, the higher stock prices you got to look at. Either that or more quantity. All right, so $924.50 is my profit. So to find out exactly what your rate of return is going to be, you take your profit, okay, max profit, $924.50, okay, and I'm going to divide it by the cost of the trade, including commissions and fees, $37,826, divided by 37,826, and for those of you that are really detail-oriented, 18 cents. And that gives me a grand total of 2.5% for 1 week. So let me explain this just a smidge, okay? All right. Okay, so the bid is $385. The ask is $386. If I buy it first thing tomorrow morning, the current price, $386.52. I sell somebody the rights, not the obligation. They don't have to do it if they don't want to. Okay, but they can if they want to. I'm selling the $387.50. That means I'm collecting $924, and whoever buys this from me at $386.50 has the right to buy it from me at $387.50 anytime between tomorrow morning, when they pay for the option, until Friday afternoon at 4 p.m. So the stock can go from 386, it can go up to 400, it can go up to 500, and that person who bought that option has the right to buy it from me at $387.50. Now, do I really care about that? No, I don't. I want a couple of things. Number one, I want to make sure the company's consistently profitable, which MSFT. Okay, now here are the dividends for Microsoft since they first started paying dividends. Back in 2004. Okay, let's read them and listen closely. Okay. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice every single number was higher than the previous number? Okay, that's consistently profitable. Every single year, higher and higher and higher. That's what I'm looking for. Okay, we looked at the numbers. We looked at the calculator, and then we calculated it out. Okay, the current price, $386, sell the 387s, pick up $936, it pays 2.5%. Do you have any idea what 2.5% per week is every single week for a whole year? Well, 1% a week is over 52%. Simple interest. Compounded at 74%. That's just at 1% per week. This is 2.5% per week. You multiply that by 52. Hold on. Because it's 52 weeks in a year, and this is why I like weekly options. Okay, that's 131%. Okay, if you can get 2.5% every single week. Now, I don't get 2.5% every week. My goal is 1% every week. It's simple, it's easy, it's quick. Okay, so I like Microsoft. Yeah, the numbers look good. Let's get out of here and go on to the next one. Get out of there. Get out of there. Change this back. And back to where we started. Right there. All right, next. We looked at the last 30 days. Okay, look at the last 30 days. Okay, here's your 30-day high. Okay, you get a 30-day high, you get profit taken, the stock drops. Well, here's your 30-day bottom right there, 377. Now you get a couple of days, go to the upside. Okay, high, drops, back up. What else do you think stocks do? They go up, they go down. They go up, they go down. If you are expecting Microsoft to come to your house and serve you breakfast in bed, make the bed, nice little hospital corners, nice and tight, put some candies on your pillows, take the dog out for a walk, dump the trash. No, they don't do that. They go up, they go down, that's it. They don't do anything else but go up and go down. That's all they do. Never buy a stock you do not want to hold on to. If you don't like Microsoft, don't buy it. Make sure whatever you buy makes sense to you. Okay? Next. Target. Ooh. Now, Target's an interesting one. Target is highly susceptible to black swans. Okay? Here's Target. Okay? Here's the high. Here's the low. Look at the movement. I'm just going to say no right off the bat because this thing's dropping like a rock looking for a new bottom. Now, I'm going to put it down for this week to keep her eye on it because as soon as she finds the bottom, she will turn around and go back up. Reason being, well, the company's over 100 years old. They have consistently increased their profits every single year to their shareholders for 5 decades or more. Now, you may not like their politics, okay? You may not like what they're doing or what they have done, but you cannot argue with the numbers. The company has consistently increased its dividends for more than 5 decades. Okay? But it is dropping. I'm looking for a bottom, waiting for it to turn around, go back up. It's going to be a no for this week. NQ, never heard of it. Never heard of NQ. So let's take a look. What is NQ? It's a no. That was simple. Energy transfer. Ooh, take a look at that one. Okay? The high, the low, where was it? Where is it? Look at the movement. Sideways, up, down, up. 1936 to 1950s. Not quite there. Okay? Go 1950. I'll be looking for 19 cents. These numbers don't work. Sorry. It's actually that simple. This is not 1%. So it's going to be, no matter how good this looks, I'm not getting 1% out of this, so no. Sorry. Energy transfers. Ooh, Siri. Ooh, interesting. High, low, where was it? Where is it? Look at down, up, down, up, down, up, down. 22.94, the 23s, 66. That's almost 3%. I like that. Let's take a look at the chart. Okay, a year ago. We're at 40.37. The high of the year was a couple of months later in the beginning of July at 41.55. Well, look at the last 90 days. Okay, here's your last 90 days. The high, the low, where was it? Where is it? Look at this. Up, down, up, down. Now, we have a bottom here, a 30-day bottom here, and 1 day to the upside. Thursday is the 30-day bottom. Okay, 17, right there. Okay, 30 days ago, right here, 27.50. Here's the bottom, Thursday. Friday's 1 day to the upside. I like 2 days to the upside because this could be an anomaly, and it could keep on dropping. So if tomorrow's higher, great. Then Tuesday, if she's higher again, then that's a yes. Because I like 2 days to the upside before I jump in and call it a bottom. It's a possible 30-day bottom. Possible. So I'll see what happens tomorrow morning. So I'm going to write Siri down as a possibility. Okay. Next, Alcoa, AA. Ooh, I like this one. Did you see that? Okay. High, low look, it's up, down, up, down. Now she's going back up, 33.27 to 33.50s. 134. Well, that's over 3%. Close to 4, but it is over 3. All right, now, do you like Alcoa? I like Alcoa. It's on my list. Well, let's take a deeper look into this. A year ago, we're at 31.28. Jump up, pull back. Here's the bottom right here. Bottom of the year, the beginning of August at 27. All righty. Last 30 days. Sorry, the last 90 days. Okay, here's the last 90 days. The high, the low, where was it? Where is it? Look at this. Down, up, down, up, down, up. 33, where he said that. Here we go. 30 days. I want to look at the last 30 days. Right there. Now, look at that. Here's your 30-day high, 38. She drops. Here's the 30-day bottom. Tried to retrace, pulled back. Now we have 1, 2, 3, 4 days to the upside. That is definitely going up. 33.53. All right. What does it normally do this time of year? Normally right there. Check that out. That doesn't look that bad. Okay, we're almost at the bottom right there. See? And then she shoots up. I like this one. I'm going to write this one down for tomorrow. And no, that is not a recommendation. That is not a tip. That is just, I like it. I'm going to look at it tomorrow morning. That's basically all it is. Next, AT&T. Oh, wait a second. You know what? For the fun of it, let's do another covered call on Alcoa. Okay, the 33.50s. I like the 33.50s. See the current price right now? 33.27. I'm going to do the 33.50s. Let's see what it looks like. Okay, first change this. Covered right there. 33.50s right there. One contract. Right there. Change for market. Right, and here it goes. By one covered call, Alcoa 100, that's the weekly, 28 March 25. That's this coming Friday. Is that right? Or is that next Friday? No, that's next Friday. No wonder why that number looks so good. All right, hold on. Let's back up for a second. We're looking at the wrong number. Delete. All right, the 33.50 right there. All righty. Silly me. See, that's why I always tell people, make sure you read it out loud so you can hear what it sounds like to make sure you're doing the right trade. Because most people are going to lose money by hitting the wrong button. Now, I'm guilty of it. I hit the wrong button 3 times last year and 2 weeks ago, or 3 weeks ago, I hit the wrong button. Now, I've been trading for over 20 years. If I can hit the wrong button and lose money, so can you. So read it out loud. Make sure it sounds right. By one covered call, Alcoa, AA 100, that's the weekly, 21 March 25. That's this Friday. Okay. The 33.50 call against the stock at the market to open. Here's my profit, 122. It's going to cost me 3,200. Let's take the calculator out, see what that sounds like. Okay, let's clear that out of there. 122 right there is my profit, 122. Divide that by, what is it costing me for this trade? 32.28. 32.28. And that comes to a grand total of 3 point. Holy shit, I'm going to write that one down. It is written down. Yeah. 3.7%. Well, that's nice. And I do like Alcoa. Okay, so. Next, AT&T. We'll take a look at AT&T. Get rid of that. Change this. Go back to here and put in AT&T. AT&T. Interesting. Now this I'm a little leery on. Okay, look at the nice movement. Okay, up, down, up, down, up, down. We're at 28.56. 26.58. Okay, so the 27s are going for 18 to 20. Sorry, those numbers just don't work for me. That's not 1%. Even though the chart looks okay. No. Richard Johnson, how are you doing today? Do you need a computer? No. You can use your phone. Alicia, LVHM. We'll take a look at that in a little bit, Alicia. Okay, hold tight. Richard, thanks for coming to the show. How do I do it? Just sit, chill, pay attention. Now, you're here on YouTube, Richard. Everything you are seeing at the moment is being recorded. It's not it's being recorded, yeah. Okay, it is currently 11:09 p.m. Sunday night, the 16th. March 16th. So, yeah, this is live. It's not recorded. And I got, holy shit, 100 questions. So we got a couple more to do. I'm just going to breeze through them real quick. It's going to be no to AT&T. The numbers just don't look good. AS. Ooh, that looks interesting. No. Damn it. See, the chart looks nice. Monthlies, the numbers just don't work. No. BB. BlackBerry. Now, for some strange reason, BlackBerry just doesn't sound quite right. Okay. BB. Okay, sorry, dude. BB, there's no dividends available. That means it's going to be a no. Sorry. CRO. What the heck is CRO? Uh-oh. Okay, CRO. No options. AMC. $290. Okay, hold on a second. AMC. Okay, so AMC hasn't paid dividends in 5 years. No, sorry. GameStop. Now, I don't think GameStop even has dividends. GME. All right, GameStop stopped paying dividends 6 years ago. No. APES. No options. No, thank you. WiMAX. Okay, somebody wants to take a look at WiMAX. Let me tell you why I don't like WiMAX. YMAX. Okay, now, the reason I don't like WiMAX, too, really quickly. February 2024 is the very first dividend. Yeah, no thank you. Let's take a look at the numbers. 53, 57, 63, 73, 73, 65, lower, 59, lower, 23, lower, 22, lower, 21, lower, 20, lower, 18, lower. Do I need to say anything else? Okay, no. WiMAX, no dividends. Oh, well, the dividends, crap. RGTI. Rigetti spaghetti. There are no dividends. Right there. See, there are no dividends in the selected time period. No to RGTI. Sorry. Almost done. HPE. Now, HPE. It's Hewlett Packard, and that one. Ooh. Did you see that? The high of the low. Where was it? Where is it? Look at this. Up, down, big drop. Here's the bottom right here. The bottom of the year looks like it was Thursday. It was. Big top, big bottom. Now she's bouncing up. I would like to see it go up a little bit more tomorrow. If she's higher tomorrow, then she might be a possibility for Tuesday. Because remember, I like 2 days of the upside. And you cannot get any lower than the low of the year. And that was Thursday. Friday's 1 day higher. Who knows that's next? So I'm going to write that one down also. HPE. Next. DKF. What the heck is DKF? Oh, DKE. DKE. No, sorry. SPY. Now, somebody wanted SPY. Now, let me show you why I don't like SPY. SPY. Now, you ready? Let's take a look at the dividend. Let's go all the way back to 2005. That gives us 20 years. Okay, let's check out the numbers. You ready? 2005, 47, 49, 52, 67, 52. Backwards, that's lower. 56, 58, 79, 55. That's low. That's twice. 66, 72. 78, 64. 3 times backwards. 67, 69, 72, 56. 4 times backwards. 52. 5 times backwards. 51. 6 times backwards. 59, 48, 7 times backwards. And we're not even in the double digits yet. This is 2009. We're already 7 times going backwards. Up, down, up. Down. That's not consistently profitable. But wait, it actually gets worse. SPY, it does. We're going to go here to the summary. Right there. I'm going to check out the summary for SPY. See, I've done this one so many times. I know exactly what it is. And it's, in my humble opinion, it's a hell no. It's like, why would you... All right, look at this. $562 per share. Okay, do you see what the yield is? Do you understand what yield is? That means you put your money here, and they give you a rate of return. And that's called the yield, or the rate of return. Okay, 1.1%. It actually went down. It was 1.2% a couple of weeks ago. Now it's at 1.1%. Why the hell are you investing your money at 1.1% per year? Boggles my mind. All right, it's 11:16. We're going to stop looking at stocks. Wait a second. We got 3 more to go, and that's it. And then we'll just answer questions. All right. So, no to SPY. All right, let's get out of there. And next on the list, Mosaic, M-O-S. I like Mosaic. Ooh, look at that. That's nice. Okay, high, low. Where was it? Where is it? Look at this. Down, up, down, up. 28.67. Uh-oh. Okay, all right. I hate it when they do this. Really, I do. Let's take a look at the numbers. The last trade was $25.90. Which means we'd be probably looking in the $26 area. So the $26 area is going from 48 cents to 59 cents. So that's over 1.5%. Well, 1.5% is over 75% per year. Okay, I can deal with that. All right, so the chart. A year ago, Mosaic is at 32.13. The high of the year was the first week of April, 33.33. All right. Look at your last 90 days. Okay, here's your last 90 days, last 3 months. The high, the low, where was it? Where is it? Look at this. Down, up, down, up. Nice movement here. Okay, look at that movement. There's the bottom right here. 2 weeks ago was the bottom of the year. All right, so let's zoom in a little close. Look at the last 30 days, because the last 30 days gives me a good idea where it's going next. Not guaranteed. There's only 3 guarantees in life. Okay? Only 3. Okay, so here's the high, $27.50. Here's the bottom right here, $22.50. That's a $5 drop. That's a 20% drop from the 30-day high to the 30-day bottom. 20% drop? Yeah, it's going back up. Okay? But it goes from $22.50 to $26. That's $4.50. 450 is about 20%. That's weird. That 20% drop, 20% increase. Okay, where's it going to go? Okay, it looks like it's keeping going up. What does it normally do this time of year? Normally. Ooh. Well, here's where we are right here. Okay, here's the blue dot. This was Friday. This is where we are. She's going to go sideways for about a week, then she's going to go up a little bit. All right. Do you like Mosaic? That's the big question. Do you like Mosaic? Are you willing to hold on to it until it hits your target? All right. Uh-oh. MSTY. I could just say no, or I can go right to here, put in MSTY. Okay, here it is right here. Yield Max MSTR or MSTY, an electronically traded fund, which means you're giving your money to a computer to do it for you. Okay, and don't give me that bullshit. Okay, now look at the yield on MSTY. 157.9%. 157.9%. That is freaking impossible. Think about it. They cannot give you 50% more of the profits. Okay, so if they profit $1 million, well, they're giving you 1,500,000. How the hell are they going to do that? This is impossible. Okay, you can't give out 150% of the profits. If I profit $10, I can't give you 15. It makes no sense whatsoever. Let's take a look at how often they've been paying their dividends at 157%. Historical data, come on. Here we go. Whoa. Okay, so go to the dividends. Come on. I gotta wait for it to go back. Okay. Okay, here's the historical prices. Dividends only. Dividends only. Come on. There we go. And go all the way back and take a look at every single. Are you shitting me? April 2024. This thing's not even 1 year old. How can a company not even 1 year old give out 150% of profits? It doesn't make sense. That means they're going backwards. And then look at the numbers. 413, 250. That's almost a 40% drop. Then it goes to 3. That's a 20% increase. Then it goes down to 233. Then it goes to 1,893. Then it goes to 1. Yeah, no. Not profitable, and they're actually going back. They're going backwards in such a rate. Anyway. Let's take, it's 11:22. We get 8 minutes left. We got 99 questions. Okay, so let's go up. So Misty's going to be a no, not enough dividends. SPY had multiple splits. That's why dividend goes down. No, because here's the thing. If the stock is $100, okay, and it gives a $50 dividend, okay, that's a 50%. Okay, fine. If the stock gets a split, now it's a $50 stock. The dividend gets split also. So it's still the exact same percentage. Okay? And no, SPY did not split that many times. It went up, it went down, it went up, it went down. 1.17% for the yield on SPY. Okay, I always tell people, make sure you have access at your little fingertips, a financial website. Go back and take a look at all the prices. Go back and take a look at all the dividends. Go back and take a look at all the information. Okay? I don't like SPY. The numbers just don't work for me. There are too many other companies that are consistently profitable. Okay, Cole, you asked me about mortgage REITs. Thanks. Jump back in tomorrow night. We'll take another look. Okay. Soccer King. Misty pays monthly. Yes, I'm well aware of it. But they're paying more money than they're bringing in. There's no way to sustain that. All right, Angie, thank you for that. Where are we? Okay. Texas Gold and Silver Company, how are you today? Maximus, what's going on? Angie, so you subtract the dividend amount from the current price, and that's the price you jump out. No, that's not what I said, Angie. What I said is, I can't tell you what to do. Okay, what I do for my grandson is I buy it at the market price at the opening of the day. Then, whatever the dividend is, if the dividend's 50 cents, if that stock goes up 50 cents, I'm out. What kind of trader are you? Lonely. I'm so lonely. Be up 3.5% today. All right. Dean, what's your opinion of AMD, Advanced Micro Devices, long term? Okay, Dean, I don't do anything long term. My idea of long term is 30 days. Can we do Hawaiian Electric? Sorry, Nate. Hawaiian Electric stopped paying dividends quite a while ago. So we would watch the stock and should be able to sell the same day. Sometimes yes, sometimes no. Now you got to be very careful, because FINRA, FRNA, says you cannot buy and sell the same time, the same stock every day. You can't buy and sell in the morning and sell it in the night. That's considered day trading. And if you're going to day trade, you got to have a minimum of $25,000 in your account. I think it's a stupid rule. Personally, I do. If I buy it first thing in the morning and the stock goes up, why are they punishing me for taking a profit? Tony, we'll take a look at Kohl's and Walgreens tomorrow. And then Adam Thompson wants to take a look at Dell. We'll take a look at Dell tomorrow. I like Dell. Dell's one of my favorites. Collect with Lulu. Mickey D's, huh? MCD. And then Joe. Joe, how are you doing today? Advanced Auto Parts, huh? All right, Joe. John Hairbaum, how are you doing? Drew, what's happening? Angie, do we have to sit and watch until the stock price goes up, or do we set an alert? Okay, you are new at this. Basically, once you buy a stock. Now, see, the reason why I like Thinkorswim is because Thinkorswim has what's called a trigger trade, which basically means I can buy it at the market at the opening of the day, and then I can set whatever price I want to sell it at. Okay? And then that allows me to, hold on a second. Let me just show you one. My freaking glasses. Okay. Let's get rid of this. Okay, let's take a look at Mosaic right there. I want to right click here. Buy custom. Uh-oh, wait a second. I don't have it set on this one. I have it on this one, though. I have it on this one. Okay. Trade. Okay, Intel, let's do this. Buy custom, there it is right there. And here's the trade right here. Okay, buy 100 shares of the stock at the market to open for the day, and then sell the exact same shares, the exact same, what do you call it? Yeah, the exact same amount of shares, the exact same company, triggered by a 55-cent increase. Or I can change it to 51. Whatever the dividend is. Okay? Limit order, good till cancel. Then I hit confirm and send. And here it is. Buy 100 shares of Intel at the market to open. Sell 100 shares of Intel triggered by a 51-cent limit order move to the upside. Okay? That's it. Whatever it fills at. Whatever she fills at first thing in the morning, it's going to add 51 cents to it, and it's going to get me out as soon as it hits that 51 cents. That's called a trigger trade. Okay? Anyway, let's keep on keeping on. Can I do Apple, please? Winnie! Okay, I'm going to write Apple down. We'll take a look at it tomorrow. All righty. You like BlackRock for dividends? Hell no. Dividends aren't that great. You're welcome, Mikey G. Philip Aubrey, how you doing? Duke of Fluffington. All righty. Michael Heidler, BBC. What the heck is BBC? We'll take a look at that one tomorrow. Hey Rizzo, what stock do you sell covered calls on with high premiums? Dell and Intel. Those are the highest premium ones that I know of so far. User CCI. What the heck is CCI? CCI. 05 Charter. How you doing today? Alan. Think PayPal can double in the next 3 years? Sure, why not? Brenda. Thank you for that, Miss Brenda. Goatsus Aureus. Or Aurelius? AEHR. Never heard of it. AEHR. Thank you there, Miss Brenda. Ooh, Jersey wants to take a look at Mara. M-A-R-A. We'll take a look at that one tomorrow. Oh, Rich Lafray. Reggetti. No. Soundhound. No. Ionic. No. Tesla and Target. Now, see, I'll do Target. I won't do Tesla. Kalaman Bluestone. I found you on TikTok tonight. Interesting. Well, thank you there, Kalaman Bluestone. Make sure it's me, not someone pretending to be me. There's about 30 people pretending to be me. So I always tell people, if you really are interested, DM me with your phone number. I will give you a call, provided that your phone number is a U.S. phone number. I can't call Canada. Trey Sanders, user. Uncle Nee, what's happening? Demwit, what does it mean that international traders are selling us binds? No idea what that means. Selling U.S. binds. Is it better to do covered calls on Sync or Swim because I have an E-Trade account? Now, I honestly couldn't tell you. I tried E-Trade years ago. I don't like it. Oh, Demwit, bonds. What does it mean when international traders are selling bonds? Maybe they're making a profit off of it. About all I can think of. People buy and sell for whatever reasons they buy and sell. I honestly don't know why they do that. Andrea wants to take a look at Riley. R-I-L-Y. Now, I do have some Riley. We'll take a look at that tomorrow. Sebastian, but SPY had multiple. Yeah, okay, we already read that one. Okay, Brooklyn, Palantir. Dude, seriously, take a look at the numbers for Palantir. You'll change your mind. Plate, never heard of it. PLCE. What the heck is PLCE? PLCE. All right. Children's Place Stock. I have no idea what that means. Old Indian Lover. How are you doing this evening? Crypto 1828. How are you doing today? What platform are you using? That's Think or Swim. Zachary, what's going on? Crypto. Dylan Cooper, what's up? Chosen Angela. Do you mentor others on investing? Yes, I do. Wampa 96. How are you doing today? DGEIX. Never heard of it. Let's take a look at that one. DGEIX. It sounds like a no to me, but okay. How much is good amount to invest for beginners? Now, iBird or Jaybird, my suggestion to beginners, okay? Paper trade. Play with some monopoly money. Don't risk anything until you are good at what you are doing. When you are ready, it will be time for you to put real money into it. You will know. Ricky McPhail, hey buddy, can you check Diego next, please? And thanks. Well, I appreciate the hospitality there. Very nice of you there, Mr. Ricky. Now, I am on 3 hours a day, okay, from 9 until about 11:30. It's 11:34. I'm just finishing up answering questions, and then I'm done for the night. We can take a look at it tomorrow, though. But you got to give me the ticker symbol, because I really don't know who Diego is. Angie, so if we sell, we won't have the stock for a dividend payout. Okay, so Angie, what I was telling you about dividend capturing 2.0, if the dividend is 50 cents, okay, dividend's 50 cents. If you buy the stock on a Monday, 10 days prior to the EX date, and the stock goes up 50 cents, that's the same amount as the dividend. Why would you hold it? Because when the stock pays out the dividend, the stock has a tendency to go down. Stocks go up before the dividend, and they go down after the dividend. Ticker, DEO. Okay, Ricky, we'll take a look at it tomorrow. DEO. I'm on every night. Ricky, I'm on every night at 9 p.m. Eastern Standard Time, and I'm here until 11:30. Crypto. What platform are you using to analyze these? I'm using Think or Swim. Okay, Brooklyn. Yes, I know what Palantir is. PLTR, I know that. The bottom is in 2 years. We're in a recession. Well, thank you there, Robert. I did not know that. I feel much better. We're down 10% in 3 months. We're cooked. Boomers can't retire for 20 more years. 401k to zero. Okay, see, Robert, I'm not quite sure what you're doing. But I'm still consistently, every single week, even this year, I have consistently made more than 1% every single week. Even with the stocks going down, I'm still making more than 1% every single week. Now, I don't know about you, Robert, but 1% every single week is more than 50% per year. Greta, is that TOS? Yes, it is. Thank you, Laurie. Odem, your information is always on point. I love your teaching. Thank you, Odem. Calvin Hill, how are you today? Best dividend stocks. Man Bear, how are you doing today? Ooh, best Canadian stocks. I can't help you out with that, brother. I'm here in the U.S. I don't follow Canadian stock market. This would change your ROR calculations. Please correct. Okay, Just Joe. No, I tried to reach each and every single question, Just Joe, and I'm not seeing the question they're talking about that will change my ROR. Yeah, Just Joe 27. I would love to take a look at what it is you're talking about, but I can only see one entry from you, and it basically says, this would change your ROR calculations. Please correct. Okay, you actually have to give me what you're talking about, because I'm clueless here. Bring that, what's happening? Boto Coin. Arepa Chi, how are you today? Oliver Silvercorn. Okay, Oliver, how are you doing today? Tomoroso Restaurant, cool. Okay, Bodo Coin, Tesla, no. Designed for Greatness. Eli Lilly, huh? We'll take a look at that one tomorrow. Hey, Rizzo, how are you doing today? Emmanuel86, how's it going? File Moninator, okay. Destined for Greatness wants to take a look at U.S. Steel. Now, I do have some U.S. Steel. Hey, Rizzo, thank you. Flash. James, would you sell at a strike price lower than your current price and still get 1%? Yep. Ocean, how you doing? iPhone 16 giveaway. Hi, 1214. Crypto Bull Daniel. Okay. Oh, Extreme Investor. My wife had you the other night. Oh, good for you. Not sure why numbers aren't matching on my end using Robinhood. Don't know. I found a great dividend recently on Mountain. Yeah, was it MTN? That Mountain Coffee? I think that's what it is. FANG, MTN. We'll write that one down. MTN, FANG. Pfizer, PFE. Hey, what's happening? TSLY, hell no. Which is Vail Resorts stock, which owns 40% of worldwide ski resorts. I honestly don't know what it is. Mountain. Oh, it's Mountain. MTN. Okay, we'll take a look at that one tomorrow. Okay, J-Ramped. Yeah. Enbridge and VC. Yeah, no. Okay, you saw MTN and they have great dividends. I love it when people say that. I do. MTN. Oh, hell no. Okay, so let me see if I can explain this into a manner. JRG, MTN. First of all, number one, please ask the question once. I read each and every individual question. Looking at MTN over and over and over again is not going to make it a yes. Okay, it is a monthly optionable stock. 21 March, 17 April, 18 July, 19 September, 17 October. Do you see a pattern there? Those are all months, which is 12 months in a year. So if I buy Mountain stock, sell a covered call, I can only do it 12 times, which means I'm making 12 to 24% a year. Yeah, that doesn't work for me. Okay, when I say weekly options only, okay, you're showing me this and it's a monthly. The monthly numbers just don't work. Okay, I always find it rather interesting when people, if you want to do it, hey, fine. I never tell people what to do and what not to do. I'm just saying, I don't do monthlies because the numbers just don't work. Not for me anyway. RTX. Real Big Head. RTX. I like RTX. It's actually on my list. RTX. Oh, JRG. Does he ever look at TikTok? See, you're new here. Because when I say I stop all the questions and I read each one individually, well, that basically means that you're putting up a question along with 100 other people. And you think just because it's yours, you think I'm ignoring you. I'm not ignoring you. It takes time to get through all these questions. And MTN is a no. Now, he uses the dividends just to see how successful the business is. Absolute Bluestone, that's absolutely correct. If I invest $300, can I expect in monthly? What can I expect? Well, $300,000. See, here's the interesting thing. When I say 1% per week, okay, now 1% of 300,000 is $3,000 a week. Okay, so if there's 4 weeks in a month, that's $12,000. If there are 5 weeks in the month, well, that's $15,000. Okay, 1% is 1%. If you have $3,000, well, 1% is just $3. 1% is 1%, no matter which way you look at it. Destined for greatness, QQY. Dude, do you even look at the numbers, some of the stuff you ask me? No, I don't want to be disrespectful to you. I appreciate your interaction. But I've been keeping a mental count of what you're asking me to look at. Almost every single thing you ask me to look at, I'm thinking to myself, does this guy or girl, I have no idea because it's not whatever picture that is, do you even look at the financial websites to find out what the numbers look like on stocks that you put up for me to look at? I know QQY, the numbers suck. So why are you asking? Do you even look? Does anybody knows if he looks at TikTok requests? Because I think he will love MTN. I really do. Okay, JRG, like I said, I appreciate your input. I do. I looked at MTM. Great dividends. Great. Well, you invested in it. It doesn't work for me. I don't do monthlies. The numbers just don't work. MTN. Very seldomly do I get somebody so passionate about a stock who keeps asking over and over and over again. Okay, so MTN. Oh, 1997. Let's try it one more time. Maximum amount on MTN. All right, 2011. They first paid out a dividend in 2011. Brother, that's not 20 years. No, okay? 2005 is 20 years. 2011 is 14 years. Okay? I don't do 14 years. Okay? 15, 19, 21, 42, 62, 81, 105, 147, 176. Okay, explain to me. You think this is so awesome. Why in 2020 did they only pay one dividend? $1.76. Only one. Not one per quarter. 2021, it went from 176 to 88. That's a 50% decrease. How the hell can you tell me that's a good deal? I'm kind of curious. Okay? Only paid one dividend in 2020. Paid two dividends in 2021 after decreasing it about 50%. 2022, 191, 206, and then 21, 22, 23, 24. Okay, yeah. So no, MTN is not as great as you might think it is. Terribly sorry. GamHat. Or GamFat. Okay, Ford. Take a look at Ford. JRG, can you please do MTN? Wow, you really must like this thing. I've been here for like 15 times and never seen him respond to anything on TikTok. Wow, it's amazing that you've never seen it. You just don't pay attention. When do you usually come on? 9 p.m. I need to catch this from the beginning. Destined for Greatness. Thank you for that. I'm here every single night, 9 p.m., except for Friday nights and Saturday nights. Destined for Greatness, 9 p.m. Thank you. JRG. Almost seems like it's pre-taped or recorded or something. Well, JRG, I said many times, it's 11:47 p.m. Sunday night, March 16th. Okay? Who is he talking to or what is he looking at? JRG, maybe it's the premium type thing and all these people he's talking to are on another platform. No, they're all here on TikTok. Now see, JRG, you're new here. Okay? Now, and you're making it sound like I'm ignoring you. I'm not. I get Facebook over here. I get Instagram there. I get TikTok here. I get one YouTube channel here, another TikTok channel there, and another YouTube channel down here, and then a Rumble channel, and what's that other one? Twitch. Okay? I got 7 channels going, and you're upset that I'm not looking at MTN. Well, I looked at it 3 times. No, no, and no. Terribly sorry. MTM is not as good as you think it. If it works for you, great. You do what you think. So I tell everybody, if it works for you, great. You do what you think is right. MTN doesn't make sense to me. Okay, they paid 1 dividend in 2020. 2021, they paid 2 dividends after they cut the dividends by 50%. And they don't have 20 years of consistent profitability. No, no, and no. Terribly sorry you're unhappy. He's on 3 different platforms. He's almost done with the list. Yep, MTN, yep, JRG. Just ask once he answers. Coney, ooh. Okay, heavy Nigeria. Gaia. I can't read that one. Coney. We'll take a look at that one tomorrow. C-O-N-Y. You might not like what I have to say. Jay Moore, what's happening? Ocean, what's your average win amount in cash per trade? Okay, Ocean, let me see if I can answer this in a question you'll understand. 1%. My average win is 1%. So if I put in 100 grand, I'm making about $1,000 every week. What platform is this with the information? All right, secrets to trading. This is this right here is Yahoo Finance. This right here is Think or Swim. Chuck, SMCI. Oh my goodness. SMCI. Fit Gym Nation. The Master. Chase and Jack. Thanks for another great video. Can't wait till tomorrow to make it another profitable week. Yay! Week number 12. Tomorrow starts week number 12. iPhone giveaway, thank you. PD, how do you like the income funds NVDY? Okay, PD, thank you for the input. If you go to a financial website, look at the consistency of the income in which you're talking about, NVDY. NVDY. Okay, now, number one, PD. NVDY, very first dividend was June 2023. Means this thing's not even 2 years old yet. Okay, but let's take a look at the numbers. 75, 96, 81, that goes backwards. 93, 68, that goes backwards. 42, that goes backwards. That's 4 times going backwards. We're not even halfway through the first year. Okay? 51, 63, 153, 262, 261 backwards, 120. What the hell? That's more than a 50% drop. 256, 247, 125, another 50% drop. 136, 110, 102, 119, 90, 83, 161. Dude, do you not do your own homework? Do you see these numbers? There's no consistency of profitability. Consistency of profitability means 1, 2, 4, 5, 7, 11, 14, 33. Higher and higher and higher. Consistently going forward. Not up, down, up, down, up, down. The profits aren't consistent. Sorry, Petey. Consistency of profitability. Meat. What's happening? Dancing Streets. Cool. Oliver Silver Kernel. Okay. How many money could win a trader junior? I have no idea what that means. Nice TD Ameritrade. Okay. Baz Gems. Thank you. Destined for Greatness. What about YMAG? Dude, do you seriously? YMAG? YMAG. It's going to be just as crappy as the other ones. Hey, YMAG. February 2024. This thing's not even 2 years old yet. Why are you giving money to an infant? Think about it. It's not even 2 years old. You're putting your money into a company that's not even 2 years old. Look at this. 43, 59, 62, 64, 68, 64, 58, 20. Really? Go up, down, up, down, up, down. Don't you do your own research? What graph is this for? Does that say Iggles, Giggles, Tiggles? I have no idea. Are you Tony Hawk? Yeah, I'm Tony Hawk. I've had Energy Transfer on and off for years. How do I like them? I would like them better if they had better premiums. IBM, nice company. I'll write that one down. IBM, NVIDIA, Denbon, okay, NVDY, no. Are the yield mark stocks drops? Yes, they are. Take a look at the consistency of profitability and the length of time of payout. Okay, I like companies that are consistently profitable for at least 2 decades. That's 20 years. Now, the stock market's been around for over 400 years. I don't think 20 years is that much of a big deal to ask. Okay? Now, you guys can invest your money anywhere you see fit. Me, personally, I like to have companies that are consistently profitable. Ricky McTail, DEO, huh? D. We already did that one. Life is what you make it. Nice. Alex, how you doing? Oh, look at this. We're almost done. Top that, baby. All right, Cliff, what's happening? Are there any alerts that you get to help reduce your research time? I only do this research for you guys, okay? I already know the companies that I like, okay? I like companies that are consistently profitable for more than 2 decades. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, okay? And then I throw them into, Then I throw them into the calendar. That's it. I throw them into the calendar. And then I only buy those stocks that have their dividends coming up, which means, McDonald's, Sherwin-Williams, Stanley Black & Decker, Pepsi, Kimberly-Clark, GPC. These are the only companies I will look at because those are the only companies on this week. That's it. I don't want to look at AT&T. It's not on the list. I don't want to look at Home Depot. It's not on the list. I don't want to look at American Express. It's not on the list. If it's not on the list, it is a no for this week. Okay, so I got like 300 companies I look at. Okay, so this is the month of March. Here's the month of February. Here's the month of January. You see? All those. I am very systematic when I trade. Okay? If the company has a dividend and is consistently profitable and it's 2 weeks out, yeah, I'll buy it. I'll get my 1% and then I'll move on to the next one. And I will see you again in 90 days. Because guess what? Hormel. Okay? Week 1, week 2, week 3. There's only 13 weeks in the quarter. Week 1, week 2, week 3, week 4, week 5. That means every quarter. Okay? Cardinal Health, Fortis, Nordson's, always paying a dividend on the first week of the quarter. Every 90 days. And then, when we're done with that list of 13 weeks, we go back to week number 1. And then when we're done with that 13 weeks, we go back to list number 1. It goes list number 1, list number 2, list number 3, so on and so forth. Are there any alerts? Yep, whatever. Stevie, thank you. Best of TikTok, thank you kindly. Denbon, do you know how NVD profits? Yeah, not good enough for me, Denbon. Mark O'Daniel, what's happening? What does that mean? Okay, Hood, yeah. Okay, Robin Hood not been around for 20 years. Someone mentioned these said they paid weekly. I'm new to stock. Be gentle. Oh, Destined for Greatness. Now, Destined for Greatness, the name of the show is called Dividend Stock Talk. The subtitle would be Dividend Investing for Weekly Cash Flow. Nowhere in the title does it say these companies pay weekly dividends. It says weekly investing. Wait a minute. Dividend investing for weekly cash flow. Doesn't mean they pay dividends weekly. I use weekly stock options on dividend stocks. Dividend stocks with weekly stock options. Weekly cash flow. Okay. Dun, dun, dun. When you say all your money is always invested, are these the only stocks you go in and out of weekly? That's like one of the best questions of the night. Now, when I say all my money is invested every single week, let me just give you a rough idea. Hormel, AbbVie, Abbott Labs, General Dynamics, Procter & Gamble, Clorox, Lowe's, Caterpillar, Colgate, Palmolive. That's just the month of January. Then we go to the month of February. 3M, Emerson, ExxonMobil, Target, IBM, Grainger, Johnson & Johnson, ED. Ooh, you think that's erectile dysfunction. No, that's Consolidated Edison. Aflac, PPG, Dover. And then every single month, the list changes. Every single week, the list changes. But those are the only stocks I do because they're consistently profitable. That's it. If it's consistently profitable for more than 2 decades, I will honestly take a good look at it. But they got to have weekly options. There's only about roughly 300 companies that have increased their dividends to their shareholders for more than 2 decades. You can put your money anywhere you want. This is what I do. Okay, I'm not telling anybody what you should do. I will take a look at the stocks you asked me to take a look at. And I will tell you why I don't like most of them. Because to me, it's got to be logical. 1 + 1 is going to equal 2 no matter where you go. All right, anyway, let's keep on going. John Missari, how are you doing today? Why are they considered traps? Now, I'm assuming you're talking about stocks paying really huge dividends. Really huge. Especially the ones like, hold on a second. Anytime you get over 10% yield, okay, for the year, usually they give you a high dividend to suck you into buying the stock. And once you're stuck in that stock, you don't want to sell it until it recovers. Well, a company cannot pay 158% dividends. Can't. There's just no way possible. Because think of it this way. If you make $100 profit, well, you're giving away 150. You're giving away 50% more than you made. That's just stupidity, in my humble opinion. How can you give away 150% of your profits? It doesn't make any sense, especially it doesn't make any financial sense. When you sell them, do you lose money? No. Remember rule number 2? Rule number 1 is never buy something you don't want to own, okay, or if it doesn't make sense. Rule number 2 is never sell for a loss. Okay, I have 0 losses this year. 0. Okay, now a lot of the stocks I own have gone down, but I consistently make 1% every single week off of those stocks. But I refuse to sell at a loss. I have 0 losses so far this year. So let's keep on going. That silver guy. Do different platforms offer different covered call pricing, or is it even across all brokerages? You're absolutely right. It is. Now, silver guy, you can have any trading platform you want. There's a whole bunch of them out there. However, IBM only has one market maker, which means everybody buys, everybody sells to and from the exact same person. That's it. You cannot buy stocks from me. You have to go through the market maker. Okay? That's his job. His job is to make sure there's somebody there to buy and there's somebody there to sell. That's his job. So you cannot sell to Tom down the street. You cannot sell to your brother unless you have the certificates in your hand. Then you can sell them to someone else if they're unlabeled. Okay. Now, usually the date of record has the person's name who owns them. And then, yes, you have to actually contact the company saying that you stole your shares, if you do it that way. Is not a profit till you take it. Chasing Jack, that's a good one. Using Robinhood was trying to compare covered calls you were doing, and it didn't match up. Okay, Silver Guy, Robinhood is a little bit different. Okay. Yeah, I actually do trade on Robinhood. Okay, so if you want to chat, drop me your number. I will give you a call. Now, I say that every night because every night anywhere between 10 and 20,000 people come through these 7 different channels. And out of all those people, when I say drop me your number, I'll give you a call. Ooh, I should get that on the sign. Drop me a number, I'll give you a call. Jay Moore, James, good to see you. Have a great night. Well, let's see what I can do about that. Alpha's Alpha, how you doing? Jessica Aaron, good evening. Good. Garrett, I have a feeling Friday's rally was just a bait for retail traders with rug pill coming soon. All right, Garrett, thank you for that. Thank you. I appreciate your input. All right, destined for greatness. I'm here every night, so, come back, ask whatever questions you want. I'll answer them as best I possibly can. But I always tell people, do your own research. Do your own investigation. Make sure it makes sense to you. Never buy something you don't completely understand or you do not want to hold. Where do I start? And know you. Hey, how are you doing today? How do you start? Well, you start any way you want. First, it starts in your mind. It's like, yeah, I want to invest. I want to take some of my money and I want to put it to work. Then you decide, what is it you want? And how much time do you have to put towards it? What is your goal? What is your outcome? What do you see yourself doing? Now, whatever you think you want to do, you got to understand that it's all going to take some time. A learning curve. Like, well, what do you want to do? And then you work the equation backwards. If you want to get a 20% per year, great. Find a strategy that'll get you a 20% per year. If you want 50% a year, fine, great. Get a strategy that'll get you that. Then work the equation backwards. And then decide, do you want to do futures, stocks, cryptocurrency, collectibles? Your money has to go somewhere when you retire. And that income has got to come in from somewhere. Yay, baby, what's happening? Over there on Instagram. All right, so we are 37 minutes past the hour. Well, I am done. You guys have a great night. I will see you again tomorrow. Now, for those of you guys on my morning trading group, I'm going to be sending you an email very shortly with the link to the live trading. Where would you start? Futures or stock? Okay, know you. Find something that works for you. Now, futures, it can be a little challenging. And they do have options. Have a good night. We'll do. Den Bond, thank you. Good night. Chasing Jack, have a great night. You too. Happy St. Patrick's Day. Yay! All right, that being said, you guys have a great night. William McKinney, thanks for stopping by. Okay, and you guys over here on Instagram, have a lovely evening. You guys here on TikTok, have a lovely evening. See you again tomorrow. Oh, right there. And for now. And you guys on YouTube, have a lovely evening.